Stock of the day, pretty obvious one. Sigma Healthcare certainly been in the news as it merges with Chemist Warehouse to create a near $9 billion health giant. Under the deal, Chemist Warehouse will own 85.8% of the merged company post-completion, with the proposed merger creating cost synergies initially estimated at about 60 million per annum, expected to be realised 4 years post-completion. Sigma will undertake an entitlement offer to raise about 400 mil to provide the working capital required to implement a supply contract with Chemist Warehouse starting 1st of July 2024. Sigma's board unanimously recommends shareholders vote in favour of the deal. David Lane, what do you reckon about the deal? And should shareholders follow the advice of directors?
Well, yeah, it's certainly been long touted in the press, and Sigma shares late last week were put into suspension, and then the details announced this morning. So, yes, it's definitely a transformational change for Sigma to become one of the largest retailers as far as chemist or pharmacy is concerned in the country. It's one of those deals that is probably meaning that most investment bankers around Australia are very disappointed, because it's Chemist Warehouse has been potentially one of the big IPOs to come to the market over the last 3 or 4 years. But effectively what this deal does is it does a backdoor listing of Chemist Warehouse onto the ASX via Sigma. So yeah, transformational as far as the business is concerned. To answer your question, yes, I think that shareholders should accept the entitlement offer. When they closed, the Sigma shares were trading at 76 cents. We had a hold recommendation on the company itself, but obviously through this merger, it totally changes the outlook for the business. The entitlement offer will be at 70 cents a share. So existing shareholders of Sigma will have the ability to buy those new shares at 70 cents, so a little bit of a discount to where they're currently trading. And at the moment, they're currently undertaking an institutional placement, so the shares will remain in suspension until Wednesday this week. And then retail investors will have the ability to take advantage of not only that entitlement offer, but then potentially to look at the company as the new merged entity comes to fruition.
Okay, so all right. So if you're saying existing shareholders obviously accept the merger deal. If you're not a Sigma shareholder, do you buy in? Is it a buy as a result of this?
Well, I think it would be yes. As I say, the analysts have got a hold recommendation on it. They'll be doing an analysis over the next couple of days. But yeah, I think that Chemist Warehouse, it's a very, very good business. It's been leading the industry for a long period of time. They've got 600 stores around the country. Sigma, as a wholesaler and distributor of the pharmaceuticals, gives them that synergy, as you said, about $60 million initially they've forecast. So yeah, I think it's a very interesting business. It's an area that we haven't really been able to invest in as retail investors previously, because most pharmacies are privately owned. So this will really be the first opportunity to invest in a major pharmacy retailer. And not only are they in Australia, but they're also global as well. They've expanded their concept in other countries around the world. So yeah, I think it's a pretty exciting deal, and I'd be looking at potentially picking up the shares depending upon what price they relist at.
Okay. Daniel, what do you think? The Pharmacy Guild has had a bit to say about it, sort of arguably Australia's most powerful lobby group, saying, will this now skew pharmacies from community-based, so-called community-based pharmacies through to big chains? They've fought Woolworths for years, haven't they? Any attempt for Woolworths to get into that chemist space?
Yeah, right, Koshi, and I think there will be a lot to be said there, and we know that the Pharmacy Guild has been very active on multiple fronts, and there's even talks, I'm not sure how far down the track this is, but Chemist Warehouse are probably going to even be competing more so in that that hospital space, the contracted hospital space with providers like Slade and such as well. So yeah, they're going to be competing on all fronts here. So there's a lot of questions in regards to how that works on a competition and a regulatory front. My question would be, and the key question here is, Koshi, like you mentioned, well, if you're not in the stock, is it a buy? Is it a potential sell? What do you do? My answer to that is that there's still probably a lot of work that needs to go into understanding what the entity will look like going forward. So, just a quick metrics, I think, it's going to be approaching around a $9 billion market cap. I'm not too sure, haven't had enough work done on the debt side and what the enterprise value will be. We know the earnings of Chemist Warehouse were around 350 odd million. So, just saying very, very rough calculations, you're going to be paying a pretty high multiple for this business. So a lot of work will need to come down to analysing that, whether it's a buy from there. But absolutely, if you're in the stock, you'd probably be subscribing for your rights there as part of the raise. So, we all know that Chemist Warehouse is dominant. It's a great company. It makes most of its profits from the retailing side. So there's not much money at all in dispensing pharmaceutical products, but they do an excellent job, and what they do better than anyone else in the space is managing that retail storefront. So, when I think about Chemist Warehouse, it kind of reminds me of the comments that I believe Nathan makes about Lovisa, where everyone knows it's a fantastic business, but I think he speaks about his daughter having worked there and the difference between working there and perhaps being an investor there. So I kind of get similar sentiments with Chemist Warehouse as well. So, I'm not sure exactly if you want to work for one, but in terms of being a business, no, it's an excellent company, but we just need to understand the deal terms and what the business will look like going forward a bit deeper.
Okay, so put you down as a hold at the moment until more details come out on how it all washes through.
Yeah, I'll definitely agree with the fact that you'd subscribe for your rights if you're a holder.
Yep.
So definitely do that. But if you're not in the stock, I'd probably be waiting on the sidelines and just see how it trades when it opens up, because, like any stock in a hold, it can open down, it can open up. I suspect there'll be a lot of demand for this deal and index inclusion, etc. So, I'd probably just be waiting on the sidelines.
We'll get into the ASX 200 as a result of this. Remind me, who owns Priceline, the major competitor? Did that go to Wesfarmers? Wesfarmers, was that?
Yep.
Yeah.
Yep.
So I wonder if Wesfarmers will get a kick up with this as well, with the change in valuation on Priceline.